Hello everyone, welcome back to Swadhyay. Today let us discuss the concept of marginal relief. Marginal relief is provided when there is an increase in the amount of tax payable including the surcharge. And such increase in the tax payable amount is greater than the increase in total income of the assessee beyond the prescribed limits for levy of surcharge. We know that surcharge is levied when the income of assessee, who is an individual, HUF, AOP, body of individuals or artificial juridical person, exceeds rupees 50 lakh. So surcharge is levied when the total income of the assessee exceeds rupees 50 lakh. So if the tax liability of such assessee is increased due to the levy of surcharge and such increase in the tax liability is greater than the increase in the amount of total income, then the assessee can avail the marginal relief. Marginal relief can be claimed by resident or non-resident assessee. He may be a super senior citizen or a senior citizen, but the person should have suffered the increase in tax liability, and such increase in tax liability should be greater than their increase in the total income beyond the limits prescribed for levy of surcharge. Let us discuss this with an example. Here, let us take the case where the total income of the assessee is rupees 51 lakh. Under the optional tax regime, the assessee has to pay tax as follows. Since the total income has exceeded rupees 10 lakh, the tax slab will be rupees 1,12,500 plus 30% of total income minus rupees 10 lakh. That is nothing but 51 lakh minus 10 lakh. So at the rate of 30% on 41 lakh, that is plus rupees 1,12,500. It amounts to rupees 13,42,500. The tax payable will settle down at 13,42,500. Since the total income has exceeded rupees 50 lakh, he has to pay surcharge at the rate of 10%. Here the total income is greater than rupees 50 lakh but is less than rupees 1 crore. So the surcharge will be levied at the rate of 10%. If we add the surcharge amount to the tax payable, it will amount to rupees 14,76,750. Now, in the next column, let us take the case if the assessee's total income is 50 lakh only. In such a case, his tax liability will be calculated as follows. His tax slab will be rupees 1,12,500 plus 30% of total income minus 10 lakh. That is 30% of 50 lakh minus 10 lakh, that is 40 lakh plus rupees 1,12,500. The total tax payable will be 13,12,500 only. And there is no levy of surcharge in this case. You can see the difference between A and B, where the total incomes are 51 lakh and 50 lakh. Due to increase in rupees 1 lakh amount from 50 lakh to 51 lakh, the assessee has to pay tax of rupees 14,76,750 minus 13,12,500. He is paying excess of rupees 1,64,250 amount due to increase in total income by only rupees 1 lakh. The total income has increased by 1 lakh. But due to the increase of total income by 1 lakh, the surcharge is being levied and the tax liability is increasing by 1,64,250. In such a case, the assessee can claim the marginal relief. Marginal relief is calculated as follows. It is nothing but the difference between the tax liabilities in both the cases. That is, in the case A where the total income is 51 lakh and case B where the total income is 50 lakh. The tax payable is 14,76,750 minus 13,12,500. So the excess tax the assessee is paying here is 1,64,250. And the total income has been increased by rupees 1 lakh only. The difference in tax liability minus the difference in total incomes is the marginal relief amount. So 1,64,250 minus 1 lakh, which is rupees 64,250, will be the marginal relief. provided to the assessee. Now, the assessee is about to pay tax of rupees 14,76,750. But since he can claim the marginal relief of rupees 64,250, we are deducting such amount from his tax liability. The tax payable will be settled down at the amount of rupees 14,12,500. To this amount, we are adding 4% cess. So the total tax payable will be 14,69,000. The total tax payable, the final answer is rupees 14,69,000. Now let us take in the case of default tax regime under section 115 BAC. Under the default regime, the assessee's income is 51 lakh rupees. In such a case, his tax liability is computed as follows. As per the slab rates, simply put, since the income is exceeding rupees 15 lakh, the assessee has to pay rupees 1,50,000 plus 30% of 51 lakh minus 15 lakh. If we compute the tax liability of assessee in this case as under the default tax regime, for the income from 3 lakh to 6 lakh, it will be the tax will be levied at 5% of 3 lakh, that is 15,000. The next slab will be 6 lakh to 9 lakh. The tax liability will be 30,000. Next slab 9 lakh to 12 lakh. The tax levied will be 45,000. The next slab 12 lakh to 15 lakh. The tax levied will be 60,000. And this 15,000, 30,000, 45,000, 60,000. When we sum all these amounts, it will be the total rupees 1,50,000. The next slab, which is total income exceeding rupees 15 lakh. In such a case, the tax levied will be 30% of 51 lakh minus 15 lakh. So, on rupees 36 lakh, we are applying the tax rate of 30% and the amount will be rupees 10,80,000. So the tax liability, final tax liability of assessee under the default regime will be rupees 1,50,000 plus 30%, that is 10,80,000. The total amount is rupees 12,30,000. On such amount, on such income tax payable, we are adding the surcharge at the rate of 10%. The total tax liability will be now amounting to rupees 13,53,000. If the assessee's total income is 50 lakh only instead of 51 lakh, in such a case, the tax liability will be rupees 1,50,000 plus 30% of 50 lakh minus 15 lakh, that is 30% of 35 lakh, which amounts to rupees 10,50,000. So, if the assessee's total income is 50 lakh only, in such a case, the tax liability will be 1,50,000 plus 10,50,000, which is rupees 12 lakh. And no surcharge will be levied since his income is not exceeding rupees 50 lakh. You can see the difference between case A and case B. The difference in the tax liability due to increase in total income is rupees 1,53,000. The difference in total income is rupees 1 lakh only. So, due to 1 lakh rupees increase in the total income, the assessee has to now pay rupees 1,53,000 tax in excess. The excess tax payable by the assessee due to increase in the total income by 1 lakh is rupees 1,53,000. Now, the assessee can claim the marginal relief. Marginal relief is nothing but the difference between the tax liability, the increase in tax liability minus the difference in total income, that is increase in the total income. So 1,53,000 minus 1 lakh is nothing. The marginal relief amount will be rupees 53,000. So the assessee was supposed to pay the tax for rupees for the total income of 51 lakh. The tax payable by the assessee will be rupees 13,53,000. But since he is claiming the marginal relief of rupees 53,000, the tax payable will be finally settled at rupees 13 lakh only. To this amount, we are adding cess at the rate of 4%. The total tax payable by the assessee will be rupees 13,52,000 rupees. Now, let us take one more example where the total income of assessee is rupees 1 crore 1 lakh. Under optional tax regime, the assessee is paying the tax as follows. This tax will be computed as rupees 1,12,500 minus 1 crore 1 lakh minus 10 lakh into 30%. That is, the amount will be 27 lakh 30,000. We know that under optional tax regime, if the total income has exceeded rupees 1 crore but is less than or equal to 2 crore, the surcharge will be levied at the rate of 15%. So, we are levying the surcharge at the rate of 15% on tax payable. That is, the amount will be 32,68,875 rupees. If the assessee's total income is 1 crore only, in such a case, his tax liability will be as follows. Rupees 1,12,500 plus 30% of 1 crore minus 10 lakhs. That is 30% of 90 lakh, which is equal to rupees 27 lakh. The tax liability will be 28 lakh 12,500 rupees. And since the total income has not exceeded rupees 1 crore, it is 1 crore, but it has not exceeded rupees 1 crore, the surcharge will be levied at the rate of 10%. 10% on income tax payable. The amount will be rupees 30,93,750. The difference between A and B, case A and case B, is the tax liability payable by assessee in case A is 32,68,875 rupees. In case B, the tax liability is 30,93,750 rupees only. The difference in tax liability is rupees 1,75,125 rupees. The difference in total incomes is rupees 1 lakh only. So, due to increase of total income by rupees 1 lakh, the total income has increased only by 1 lakh. But due to surcharge, the difference between the tax liability, that is, the assessee is going to pay excess tax of rupees 1,75,125. In such a case, the marginal relief can be claimed. The marginal relief will be the difference between the tax liabilities in case A and case B, that is rupees 1,75,125, minus the increase in total incomes. Increase in tax liability minus increase in total income, which is 75,125 rupees. The assessee was supposed to pay the tax of rupees 32,68,875 rupees. Now he can claim the marginal relief of rupees 75,125. So, final tax payable will be settled at the amount of rupees 31,93,750. Now we are going to add cess at the rate of 4%. The total tax payable by the assessee after claiming, giving effect to the surcharge and after claiming the marginal relief will be rupees 33,21,500. Let us take the same case. The total income will be rupees 1 crore 1 lakh, but the assessee is paying the tax under the default tax regime under section 115 BSC. In such a case, when the total income of assessee is rupees 1 crore 1 lakh, the tax liability will be calculated as follows. We know that for total income exceeding rupees 15 lakh, the tax liability will be rupees 1,50,000 plus 30% of total income minus 15 lakh. That is 1 crore 1 lakh minus 15 lakh into 30%. The amount will be rupees 25,80,000. We are going to add the 1,50,000 amount and the tax liability will be 27,30,000. We know that under default tax regime, if the total income has exceeded rupees 1 crore but is less than or equal to rupees 2 crores, surcharge will be levied at the rate of 15%. So, by adding the surcharge at the rate of 15% to the tax payable of rupees 27,30,000, we are getting the total tax payable amount as rupees 31,39,500. Suppose if the assessor's total income is 1 crore only instead of 1 crore 1 lakh, the tax liability will be rupees 1 lakh 50,000 plus 30% of 1 crore minus 15 lakh rupees, that is 25 lakh 50,000 rupees. The total tax liability will be 27 lakh, and to this we are going to add surcharge of 10% since the amount, the total income has exceeded rupees 50 lakh but not rupees 1 crore. The surcharge will be levied at 10% only. The total tax payable will be 29 lakh 70,000 rupees. If we see the difference between the tax liabilities, the increase in tax liability, that is A minus B, is rupees 1,69,500. But the difference in total income, the total income has increased by rupees 1 lakh only. So, due to the increase in total income by rupees 1 lakh, there is an increase in tax liability by rupees 1,69,500. In such a case, the assessee can claim marginal relief, and the amount will be increase in tax liabilities minus the increase in total income. That is 1,69,500 minus 1 lakh. The marginal relief amount will be rupees 69,500. The assessee was supposed to pay tax of rupees 31,39,500 since his total income is rupees 1 crore 1 lakh. Now, after claiming the marginal relief of rupees 69,500, the tax payable will be rupees 30 lakh 70,000 only. The tax payable will be 30 lakh 70,000 rupees only. To this, we are adding cess at the rate of 4%, and the total tax payable will be finalized at rupees 31 lakh 92,800 rupees. Okay guys, let us go through one more example quickly where the assessor's total income is rupees 1 crore 3 lakh. The tax computation will be as follows: rupees 1 lakh 12,500 plus 30% of 1 crore 3 lakh rupees minus rupees 10 lakh. The amount will be 27 lakh 90,000 rupees. The total tax payable will be rupees 29 lakh 2,500. To this, we add surcharge at the rate of 15% since the total income has exceeded rupees 1 crore rupees. The tax liability will be rupees 33 lakh 37,875 rupees. Now, if the assessor's total income is 1 crore rupees, the tax liability will be rupees 1 lakh 12,500 plus 30% of 1 crore minus rupees 10 lakh. The total tax payable will be rupees 28 lakh 12,500, on which 10% surcharge is levied since the amount has not exceeded, the total income has not exceeded rupees 1 crore. The tax liability will be rupees 30 lakh 93,750. The difference between tax liability in both the cases is rupees 2 lakh 44,125. The difference in total incomes in both the cases is rupees 3 lakh. Since the difference in total incomes, the increase in total income is only rupees 3 lakh, and the tax liability has increased by rupees 2 lakh 44,125 only. There is an increase in total income by 3 lakh, but the tax liability has increased only by rupees 2 lakh 44,125. In such a case, marginal relief cannot be claimed. When the increase in the amount of tax payable, including surcharge, is less than the increase in the total income of the assessee, the marginal relief cannot be claimed. If we can see under the default tax regime, here also the total income, when the total income is rupees 1 crore 3 lakh rupees, the tax liability will be rupees 1 lakh 50,000 plus rupees 1 crore 3 lakh minus rupees 15 lakh into 30%. That is rupees 26 lakh 40,000. The total tax liability will be rupees 27 lakh 90,000, and surcharge will be levied at the rate of 15% since the total income has exceeded rupees 1 crore. Total tax liability including the surcharge will be rupees 32 lakh 8,500. If the total income is 1 crore only, in such a case, the tax liability computation will be as follows: rupees 1 lakh 50,000 plus 30% of rupees 1 crore minus rupees 15 lakh. The tax liability will be rupees 27 lakh. To that we add only 10% surcharge since the total income has not exceeded rupees 1 crore. The total tax liability including the surcharge will be rupees 29 lakh 70,000. The difference between A and B cases is rupees 2 lakh 38,500. The difference in total incomes is 3 lakh. Here the increase in total income is 3 lakh and increase in tax liability is only 2 lakh 38,500. Since the increase in the amount of tax payable is less than the increase in the total income of the assessee, marginal relief cannot be claimed. Now let us go through the next concept, that is rebate under section 87A. The term rebate means the some portion of amount paid by the payer, in our case assessee, to the income tax department, or the whole amount paid by the payer will be returned to him. Under our income tax law, if a person has to claim rebate, he must be an individual and he should be resident of India. He must be an individual and resident of India. So the concept of rebate is applicable only for resident individuals. If the individual is paying tax under the default tax regime, how will he claim rebate? First case is the total income of such assessee does not exceed rupees 7 lakh. If the total income does not exceed rupees 7 lakh, then the rebate amount shall be income tax payable on the total income or rupees 25,000, whichever is less. So, lower of income tax payable on total income or rupees 25,000 is claimed as rebate under the income tax law if the total income does not exceed rupees 7 lakh. For example, if the tax liability, the tax payable on total income is rupees 20,000, in such a case, lower of income tax payable, that is rupees 20,000 or rupees 25,000 will be rebate. In our case, the answer is rupees 20,000. Rupees 20,000 can be claimed as rebate. Remember one thing, rebate is provided before charging cess, immediately after calculating the income tax payable, immediately after computing the tax liability of the assessee. Before giving the effect of cess at the rate of 4%, we have to check if the assessee is eligible to claim the rebate. Now, we have discussed the case where the total income of the assessee does not exceed rupees 7 lakh. If the total income exceeds rupees 7 lakh, then the rebate is calculated as follows in 3 steps. First step, calculate the difference between total income and rupees 7 lakh. Let that amount be A. In step 2, compute the income tax liability on such total income. Let the amount be B. In step 3, see if the amount B is greater than A. The amount we have arrived, the tax liability on total income, B, is greater than the difference between total income and 7 lakh rupees. In such a case, the rebate under section 87A would be B minus A, that is tax liability on total income minus difference between the total income and rupees 7 lakh. To understand this clearly, let us go through one example where the total income of assessee is rupees 7 lakh 15,000. In the first step, we are calculating the difference between total income rupees 7 lakh 15,000 and rupees 7 lakh, that is rupees 15,000. In step 2, we are computing the tax liability on total income of rupees 7 lakh 15,000. Under default tax regime, for the total income from rupees 3 lakh to 6 lakh, the tax is charged at the rate of 5% on 6 lakh minus 3 lakh. The amount will be rupees 15,000 plus 10% on rupees 7 lakh 15,000, that is total income, minus rupees 6 lakh. So 10% tax will be charged on rupees 1 lakh 15,000. Total tax liability will be rupees 26,500. In step 3, since the B is greater than A, the tax liability on total income is greater than difference between total income and rupees 7 lakh. The rebate will be rupees 26,500 tax liability minus rupees 15,000, that is the difference between total income and 7 lakh rupees. So the rebate amount will be rupees 11,500. We have to deduct this rebate amount from total tax payable. Total tax payable on the total income, as we have calculated in the step 2, is rupees 26,500. From such amount, we are deducting the rebate amount of rupees 11,500. So the tax liability will be rupees 15,000, and on such amount we are charging cess at the rate of 4%. Total tax liability of the assessee will be rupees 15,600. Now, if we consider the case where the resident individual, the assessee, is paying tax under the optional tax regime, that is, he has opted out of default tax regime. In such a case, if the total income of the assessee does not exceed rupees 5 lakh, then the rebate can be claimed as follows. The rebate amount shall be income tax payable on his total income or rupees 12,500, whichever is less. The rebate amount will be lower of income tax payable on his total income or rupees 12,500. Remember this point, guys. Rebate under section 87A is not available in respect of tax payable at the rate of 10% on LTCG taxable under section 112A. And also, remember this point. Rebate can be claimed by normal resident individuals and senior citizen individuals. But rebate cannot be claimed by super senior citizens, because the basic exemption limit for super senior citizens itself is rupees 5 lakh, and for the rebate to be claimed, the total income shall not exceed rupees 5 lakh. If there is any senior citizen, super senior citizen who is of age 80 years or more, he is paying tax. It means he has exceeded the basic exemption limit of rupees 5 lakh, and in such a case he cannot claim the rebate. Simply put, for super senior citizens, that is the individual residents who are of age 80 years or more, they cannot claim rebate. Now let us discuss the next concept, that is partial integration of agricultural income with non-agricultural income. Generally, this concept is applicable to individual HUF, AOP, body of individuals and artificial juridical persons, where an assessee is already having non-agricultural income, total income from non-agricultural activities exceeding the basic exemption limit, and on top of that he is earning net agricultural income of amount exceeding rupees 5,000 per annum. The agricultural income, net agricultural income, has exceeded rupees 5,000 per annum, and he is already having non-agricultural activities which is fetching him income which is exceeding basic exemption limit. Then the partial integration of agricultural income will be applicable. The two conditions must be satisfied. First is the income from non-agricultural activities is exceeding basic exemption limit, and the income from agricultural activities is exceeding rupees 5,000 per annum. In such a case, partial integration of agricultural income with non-agricultural income concept is applicable. How is tax calculated in such scenario? In step 1, we have to add net agricultural income and non-agricultural income and compute tax on such aggregate amount. Let the amount be A. The tax computed amount is A. Now, in step 2, let us add net agricultural income to basic exemption limit of that assessee. Compute tax on such income. Let the amount be B. In step 3, deduct B from A, that is A minus B. In step 4, the sum arrived in the above step, that is third step, is reduced by any rebate if applicable and increased by health and education cess at the rate of 4% to arrive at the tax payable amount. Let us take examples. Remember guys, this partial integration of agricultural income with non-agricultural income, this concept is applicable only to individual HUF, AOP, body of individuals and artificial juridical persons only. It is not applicable to firms, cooperative societies, companies, etc. Let us take few scenarios. Now, let us take 4 cases where the assessee is paying tax under the default tax regime. Under case 2, he is paying tax under optional regime, that is as per the normal provisions of the Act, and his age is less than 60 years. In case 3, he is paying tax under optional regime as per normal provisions of the Act. His age is greater than 60 years, that is he is senior citizen, and in case 4, he is super senior citizen. Non-agricultural income of the assessee is rupees 7,30,000. Agricultural income is rupees 4,80,000. The expenses the assessee has incurred for agricultural income is rupees 1,70,000. Now, how is net agricultural income calculated? It is nothing but total agricultural income the assessee has earned, that is rupees 4,80,000 minus expenses he has incurred for the purpose of agriculture. Here in our case it is rupees 1,70,000. So net agricultural income is rupees 3,10,000. In step 1, we have to add net agricultural income to non-agricultural income, that is rupees 3,10,000 plus non-agricultural income of rupees 7,30,000. The amount is rupees 10,40,000 in all 4 cases. The tax payable on such amount now differs in these 4 cases. In case number 1, the tax payable will be rupees 45,000 as per the slabs under the default tax regime. For the first 3 lakh to 6 lakh, it is the tax rate will be at the rate of 5%, which will be rupees 15,000. The second slab, for the total income from 6 lakh to 9 lakh, the tax payable will be at the rate of 10%. The amount will be rupees 30,000. Now, the next, this total amount will be rupees 45,000. 15,000 plus 30,000 is 45,000. The next slab is from for the total income from rupees 9 lakh to 12 lakh. The tax payable will be at the rate of 15% on total income. Rupees 10 lakh 40,000 is the total income minus rupees 9 lakh. 15% on 1 lakh 40,000. So, the total tax payable under the default tax regime as per the slabs is rupees 66,000. Coming, let us go to the step 2 under the default tax regime. We have to calculate, we have to add up the net agricultural income with basic exemption limit. Under default tax regime, basic exemption limit will be rupees 3 lakh. And our net agricultural income is rupees 3,10,000. If we add up, the total amount will be rupees 6,10,000. Tax payable in such a case will be for the first 3 lakh to 6 lakh. The first slab, the tax rate is 5%. The amount is rupees 15,000. The next slab, that is for total income of rupees 6,10,000 minus rupees 6 lakh. 10% tax is levied. 10% on 10,000 is rupees 1,000. So, tax payable will be rupees 16,000 in step 2. Step number 3. We have to deduct B from A, that is A minus B. Rupees 66,000 minus 16,000. The amount is rupees 50,000. This is our tax payable, and to this in step 4 we are going to add cess at the rate of 4%. Rupees 2,000 is added. The total tax payable under the default tax regime will be rupees 52,000. Okay guys, now let us go to the optional regime where the assessee is aged less than 60 years. His basic exemption limit will be rupees 2,50,000. In such a case, we have added up the net agricultural income rupees 3,10,000 to non-agricultural income, that is rupees 7,30,000. The amount is rupees 10,40,000. On this amount, tax payable will be rupees 1,12,500 plus 30% on total income, that is rupees 10,40,000 minus rupees 10 lakhs. 30% on rupees 40,000 plus rupees 1,12,500 will amount to rupees 1,24,500. In step 2, we have to add up net agricultural income and basic exemption limit. Net agricultural income is rupees 3,10,000. Basic exemption limit of the RSA is rupees 2,50,000. So the total amount is rupees 5,60,000. On this, tax is payable as follows: rupees 12,500 plus 20% on 20% of 5,60,000 rupees minus rupees 5 lakh. That is 20% of rupees 60,000 plus rupees 12,500. Total will be rupees 24,500. Step 3. A minus B. Rupees 1,24,500 minus rupees 24,500. In step 3, we are getting the amount rupees 1 lakh. To this, in step 4, we are adding cess at the rate of 4%, that is rupees 4,000 rupees. The total tax payable by the assessee under optional regime will be rupees 1,04,000. Next, the assessee is senior citizen. His basic exemption limit is rupees 3 lakh. In such a case, in step 1, we have arrived at net agricultural income plus non-agricultural income rupees 10,40,000 rupees. On such amount, tax is payable as follows: rupees 1,10,000 plus 30% on rupees 10,40,000 minus rupees 10 lakh. The total amount is rupees 1,22,000. In step 2, we have added net agricultural income with basic exemption limit of rupees 3 lakh. 3,10,000 rupees plus rupees 3 lakh, that is rupees 6,10,000. On this, tax is payable as rupees 10,000 plus 20% on rupees 6,10,000 minus rupees 5 lakh. That is 20% on rupees 1,10,000. The total amount will be rupees 32,000. In step 3, A minus B, that is rupees 1,22,000 minus rupees 32,000. We have arrived at a figure rupees 90,000, on which in step 4 we are going to add cess at the rate of 4%, that is rupees 3,600. Total tax payable will be rupees 93,600. In the next case, where the assessee is super senior citizen, his basic exemption limit is rupees 5 lakh. Net agricultural income plus non-agricultural income is rupees 10,40,000. The tax is payable as rupees 1 lakh plus 30% of rupees 10,40,000 minus rupees 10 lakh, that is 30% of 40,000. The total amount is rupees 1,12,000. In step 2, we are adding net agricultural income to basic exemption limit of rupees 5 lakh, that is 3,10,000 rupees plus rupees 5 lakh. The amount is rupees 8,10,000. On such amount, we are charging 20% on rupees 8,10,000 minus rupees 5 lakh. That is rupees 62,000 is tax payable on such amount. In step 3, A minus B, that is we are arriving at a figure rupees 1,12,000 minus rupees 62,000, that is rupees 50,000. On such amount, we are adding cess in the fourth step at the rate of 4%. The amount is rupees 2,000 and the total tax payable will be rupees 52,000. In optional tax regime, we are not considering rebate and we are directly giving cess at the rate of 4%, since the total income has already exceeded rupees 5 lakh. Also under default tax regime, the total income has exceeded rupees 7 lakh. And you guys can calculate once. For rupees 7,30,000, the rebate cannot be claimed under section 87A. For the amount of rupees 7,30,000, rebate cannot be claimed under section 87A. So without giving the effect of rebate, we are directly adding the cess amount at the rate of 4% in the example, and we are arriving at the total tax payable figure. This is it for today's video, guys. And in the next video, let us revise the tax rates for other assessees and let us try to wind up the chapter basics. Thank you.